as a new investor, there's all these kind of accounts or platforms that people will throw at you. You hear words like unit trust or index fund or ETFs. It's a lot of financial jargon for someone who has no idea how that situation works, which would be great if I came to somebody saying you're a professional. So could you give the people at home just a little bit of information on these different kinds of funds?
Yeah, so that's a good question. When we're talking about index funds, simply put, is a whole bunch of stocks with shares in a certain category. So, for example, you can have resources. There's going to be all the mining companies so you would buy the index, resources index, so you're buying a percentage of all the mining companies.
Okay.
So it's just a way of grouping kind of firms. You get like the financials index, you get a popular one is S&P 500, which is like the biggest 500 companies in America. So all an index is a group of firms in the kind of a bracket.
Okay.
So when you're looking at things like a unit trust or an ETF, an ETF and a unit trust are also, for all intents and purposes, the same thing. Before today, you asked me about it, so I thought it's actually quite an interesting question. So I went and checked an ETF and a unit trust, and of the same index. So the index was the top 40, JSE top 40, which is the 40 biggest companies in South Africa. So I checked at the ETF version and I looked at the unit trust version. Now, if you look at the underlying holdings of these different vehicles, you'll find that they're almost identical. The only difference is with a unit trust, I give money into the fund and I own a percentage of it based on, I buy units into the fund. So let's say there's 100 units and the fund is worth 100 Rand, that's the total assets. If I put in 10 Rand and I own 10 units, I own 10%, so to speak. So all you're doing is you're buying a piece or a portion of it. And the ETF, you're doing exactly the same thing, but instead of buying a unit, you're buying it directly from the stock exchange. So you're going directly onto the exchange. So for all intents and purposes, it's really the same thing.
They run on the same mechanism.
Exactly. So where it gets interesting is when we're talking about different investment vehicles, and then we're using these different
avenues.
So these different ways of investing in these vehicles, which we can get into. I think that's where people make a lot of their mistakes.